On today's episode, we are going to take a look at two stocks that are down big after reporting earnings, and earnings weren't that bad. Is this a buying opportunity? We're going to find out in today's episode. If this is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up and make sure to stay tuned because I live stream here on YouTube, taking a look at stocks you want me to look at. So let's get started. But before we begin, let's take a listen to today's sponsor. I want to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. Alright, so the first stock we're going to take a look at is Pinterest. This is traded under the New York Stock Exchange at ticker PINS and is currently down 12% after reporting earnings. From its 52-week high, the stock has seen a nice pull down about 23.4%. Now let's take a quick recaps of their earnings. So first thing we can see, they did beat everything on expectations except monthly active users. And unfortunately, monthly active users is a very important metric for these type of social media companies. Another thing that did not help out is during the company's letter, they did mention that starting in mid-March, the easing of pandemic restrictions slowed United States monthly active users growth and lower engagement year over year as people spent less time online. So this is telling us that, hey, they're kind of warning us that for the next few quarters, they're gonna probably see a bit of slowdown in engagement and growth. They also mentioned that in quarter one, they saw good retention of the monthly active users they gained during the 2020. That's good news, right? It means the subscribers and the users that they grabbed last year are still in their platform. But they don't know if or how long this retention will last. Our understanding of future engagement level is similarly limited. So what are one things investors hate? Investors hate uncertainty. And this is what's happening with Pinterest, right? Pinterest is giving us this uncertainty of what's going to happen with the stock. All right, so next let's take a closer look at those fundamental numbers and see maybe this might be a buying opportunity. The company did give guidance for the year. For quarter two, they expect revenue will grow 105% compared to the same time last year. And this to me is pretty impressive, I want to say, because quarter two of last year, that was already the time when shutdowns were happening. So they did see a nice improvement during that time in monthly active users. So for them to be seeing revenue growth still, I believe that's great news. Another thing, they expect global monthly actives to grow in the mid-teens and US monthly active users to be around flat on a year-over-year percentage basis. So again, not the best thing, but remember, COVID kind of accelerated a lot of this growth. We've seen it with other companies like Netflix, right? Netflix just reported their earnings last week. I believe it was last week. And they saw a slowdown because a lot of their subscribers and a lot of their users came during COVID levels. And so we're seeing it here in Pinterest as well. So I'm happy it's at least flat. I think it would be bad if next quarter comes around and they actually see a decrease in US monthly active users, and they also see a very slow growth in global monthly active users. And for the full year, they don't really give too much numbers. The only thing is that they are using strategic priorities to anchor in content, in the experience for the user, and in advertisement success. So right now they're just really focusing on research and development, and that's where they believe most of their expansion and growth is going to come from. All right, so now let's take a look at charts to see how things are really moving. Revenue for the quarter was up 78% year over year globally. International was up 170%, and United States revenue was up 65%. We can see quarter four, this is a bit scary if you see it by sequential quarters, right? If you see quarter four compared to quarter one, you'd be like, oh man, they really dropped the ball here. But this is expected, right? Pinterest is an advertisement business. Quarter four is when all the holidays come. So during quarter four, we expect more advertisement revenue, and that's what we're seeing. Next, just a quick look at monthly active users. We can just see the overall trend, right? We see United States based users hasn't really grown much since quarter two of 2020, and that's what they gave with their guidance. With international growth, international users have been growing at a faster rate, but they do seem a bit of a slowdown in their guidance. Next, I want to just take a look at average revenue per users. It's still pretty strong for United States. That's up 50%. Globally, it's also up 34%. And international is up 91%. So they're making a lot more money from their everyday users, and that's great news. Next, the final thing I wanted to take a look at in fundamentals was this company. If we take a look at adjusted EBITDA, they are profitable, and this is the third quarter that they've been consecutive quarter that they've been profitable in adjusted EBITDA. Unfortunately, after these earnings, there were a lot of price targets from $90 to $75, price target cut from 92 to 89, price target cut from 90 to 70, price target cut from 102 to 95. And those price targets, I believe, are another reason why we're seeing a stock price decrease right now of 12%. At the end of this episode, I am going to take a look at, I'm going to share my overall thoughts on what I would do at the moment. But now let's take a look at the second stock. The second stock we're going to take a look at is Spotify. This is traded under the New York Stock Exchange as ticker SPOT. Right now it's sitting at $265 and it's down 9.4%. From its 52-week high, the stock is down 27%. So it has seen a pullback, right? And let's find out what happened. So very similar how Pinterest, very similar to Netflix, right? It was gonna take a lot about that monthly active users and the subscribers. So first, let's take a look at total monthly active users for this company was 356 million. This was up 24% compared to the same time last year, and it was actually up 3% compared to a quarter ago. Premium subscribers, and this is where they make most of their revenue, this is 158 million, up 21% compared to the same time last year, and it's up 2% compared to a quarter ago. So we're seeing growth here. Their overall total revenue, it was up 16% compared to the same time last year. It was down about 1% compared to last quarter. A good portion of that is because ads supported very similar ads, right? Ads made up, had a strong revenue last quarter because it was the holiday season. So for them to continue to see growth, I'm still very excited, even though things are opening up. Another thing, right? Subscribers here on Spotify, I do believe will continue to grow because as people go back to work, they need a podcast to listen to. They need music to listen to. And Spotify is definitely a strong player in that market. So they saw growth all around. Why is the stock price down? The main reason I want to say is that monthly active users, they reported 356 million total active users, which were up 24%. Analysts were looking at somewhere between 360 million users. I want to say this is a bit different though, right? Because most of the revenue for Spotify actually comes from premium subscribers. That's where they make a huge load of the revenue. And that growth actually beat expectations. So I think this overreaction itself on the stock price is a nice buying opportunity for if I wanted to enter in the stock right now. Spotify has been very aggressive and innovative, in my opinion. On March 29th, they acquired Betty Labs, the creators of Locker Room, a live audio app that's changing the way insiders and fans talk about sports. This acquisition built on their work to create future formats of audio and will accelerate Spotify entry into the live audio space. We've seen a lot of other companies kind of entering this live audio space, and Spotify is right there, really in there, making sure they're not falling behind. They've also launched a joint partnership with Facebook to create an integrated ecosystem where people can listen to Spotify music on Facebook without switching apps. I think this overall platform boost, this integration and partnership is pretty good for both Facebook and Spotify. They also gave us guidance for the full year and for quarter two. For quarter two, they expect growth in monthly active users. They expect growth in premium subscribers. They expect growth in total revenue. If we take a look at for the year, they lowered their monthly active users range compared to previous guidance, mainly because quarter one was a bit weak there. Their premium subscriber outlooks remains unchanged, so they're still expecting strong growth in premium subscribers which to me is pretty impressive because this is the market they make most of their revenue from. Another thing to note is Spotify has raised its prices in the United States and in the United Kingdom. All right, so now my overall thoughts. Both these stocks have seen a crazy pullback. If I was to choose one or the other, I think I would choose Spotify right now, because Spotify, even though they saw a decrease in not a decrease, they didn't see as much growth in their monthly active users. They're still expecting huge growth in premium subscribers, and that premium subscribers is where most of their revenue is coming from. So Spotify definitely looks very, very attractive at these levels. Pinterest, I want to say, also looks attractive. I just mentioned I would like Spotify a bit more. Pinterest is pulled back a nice amount, 12%, after these earnings, right? And we see a pullback. I do believe it eliminates a good portion of the risk. Pinterest is still seeing strong revenue growth. They're still expecting growth in monthly active users. Globally, United States is not seeing a huge growth. What's more important about Pinterest, in my opinion, is how they're gonna be able to keep those monthly active users. How are they gonna continue to innovate in their platform? Pinterest, I want to say, it has more to lose if their monthly active users decrease compared to Spotify. So Pinterest may be a bit riskier, but if they're able to make something, if they're able to keep those customers there, if they're able to keep those monthly active users, I do believe Pinterest is giving a nice buying opportunity at the moment, because that earnings this quarter were great. And even though for the upcoming quarters may not be as strong, it's what was expected, right? COVID definitely pushed a lot of these companies to do better last year, and they're kind of retracting a bit this year. We see it with Netflix. We kind of see it with Spotify. It was to be expected. The true answer is, are they going to be able to keep those customers? Are they going to be able to keep that average revenue per user? So I hope you guys enjoyed today's episode. Like always, make sure to hit the subscribe button. Take care and see you next time.